Morning, morning. Good morning, guys. There's still 1 minute to 10. Okay, let us just wait for 5 minutes or so, and then we'll start.
Sanibonani. Usanenkinga la ye-load shedding uzobuya in 5 minutes time. So cela nibekezele.
Okay, good morning, guys. Can you hear me? I just want to confirm if I'm not alone. Am I audible? Sure. I see an indication there that you can hear me. Okay. Good morning, welcome on the new environment. So today we are just going to go straight to example 2 and try to do it for a preparation for test 1, as you all know. Okay, I will assume that everyone is with me. Unless you have a problem, you can indicate by showing your hand if you have any question, or if you have any, if you want to say anything, you can just raise your hand to, if you want my attention on your side. So I am trying to share one of my, I'm trying to share my screen. I just want to find out if you can see my screen on your side for example 1. I mean example 2. Oh, okay, you cannot. Let me try and share it again. Okay, can you see my screen now? Sanibonani. Ngicela ukubuza, niyayibona yini exercise 1 on your side?
Yebo, sawubona.
Okay, ngiyabonga. Kunakuthulekile, sure. Okay, can you please confirm for me if this meeting is recording on your side? Because there are people who are not here and then they requested for recording.
Yes, it's recording.
Okay, thank you so much. Okay, this is just an example 2. It's Flower Ltd. So I will just go straight to requirement. Okay, let us go to requirement 1. So requirement 1 say, discuss with the supporting calculation where necessary whether Flower Ltd is eligible to register as a VAT vendor. Okay, this is just one of the question. Or one of the things that you have to understand when you are dealing with VAT in terms of VAT administration. One of the first thing that you have to understand is that in order to be in a position to claim a VAT input, the first thing that you have to do, you must first register as a VAT vendor. Okay, the registration requirements are set out in section 23 of your VAT Act. So which means all the time, if you want to know which requirement I have to meet in order to register as a VAT vendor, you go straight to section 23 of your VAT Act. That is the first thing that you have to understand. Okay, for registration purpose, if I want to determine whether I qualify or not qualify to register as a VAT vendor, so you go straight to section 23 of your VAT Act. To summarize it, you just remember the section 23 in your example 1. There are certain things that you have to take it into consideration. For comparison registration, there is a total amount of taxable income that you must make in order to qualify for registration. So one of the conditions is that in order to register as a VAT vendor, you must have a taxable supply. You must supply a taxable supply. So if you are supplying a taxable supply, so that is one of the requirements which you have to consider when you want to see whether you qualify or not. So taxable supply, which means you have to supply taxable supply. Remember, taxable supply is standard rated and zero rated. So if you are supplying both a standard rated and zero rated item, you are eligible to register. That is one of the requirements that you have to take it into consideration. So, but you must be careful here. But if you are supplying only exempt items, the items which are set out under section 12. So if you are supplying one of those items only, you are not eligible to register as a VAT vendor. But if you are supplying both taxable and exempt supply, you may be allowed to register. But most importantly is that if you are only supplying exempt supply, you are not eligible to register. But if you are supplying exempt supply together with taxable supply, you may be allowed to register as a VAT vendor. Those are the things that you have to take into consideration when you are looking at this requirement. Another thing that you have to take into consideration is the value of supply. So you have to determine how much is your supply, how much it's my income, or how much it's my revenue. So if your taxable supply, excluding exempt supply, exceeds 1 million, then you are eligible to register as a VAT vendor. In the calculation of 1 million rand threshold, you must exclude VAT. So which means if you have given a value which is inclusive of VAT, the first thing in determining the value of taxable supply, you must first exclude VAT. You know how to exclude VAT. It's a value times 100 divided by a 115. Yes, that is what you have to do in order to register as a VAT vendor. So you have to do that. So I don't know whether I'm still with you or not. Are you still with me or I am alone here? Are we still together? Okay.
I see.
Yes, sir.
Okay, ngiyabonga. So izona izinto-ke lezo ofana uzibheke for registration purpose. So which means for exam and tax, and test purposes, these are the one of the theory question that you have to make sure that you understand which requirement the vendor must meet in order to qualify as a VAT vendor. In order to know that, you go straight to your tax legislation. So which means there is no need to memorize this thing. The only thing that you have to know is the value, because you are going to get the information from your legislation. Fortunately, this is it is your test and exam are open book. So you are allowed to go in exam with your tax legislation. So just the only things that you have to know, okay, to register which requirement, but you will remind yourself by looking at your tax legislation. That is what you are going to do. Okay, going forward, I'm not going to spend too much time on registration, because on the first exercise, you have a memo with you. You can have a look at those requirements. But if you look at this exercise, example 1, if you go there, you will find that you have sales, and then your sales has a note 1. If you go to note 1, your sales are categorized into 3. There is a local sales, there is a sales to local. Okay, there is a local sales to vendors, and there is a local sales to non-vendors. Okay, number 1 and number 2, which means 80% is standard rated. So you charge 15% whether someone is registered as a VAT vendor or not. So which means if someone comes into your business and buy an item, and that item is VATable, you charge VAT without looking at whether that person is a VAT vendor or not. So which means everyone who comes into your shop, so if he's buying an item which is standard rated, you are going to include, or you are going to levy, or you are going to charge VAT, regardless whether he's a VAT vendor or not. So which means the first two, 60% and 20%, those are standard rated. But last one, which is an export, is 0 rated, which means that 80%, that 100%, which is 60, 20, 20, which is equal to 100%, is equal to 2,678,130. So which means that 2,678,130, it's your taxable supply. That is your taxable supply. The next thing that you have to consider in that 2 million 678,000 is whether this amount is inclusive of VAT or exclusive of VAT. So which means the first thing that you can do, you can take that 2,678,130 times 100 divide by 115. If the final result is above 1 million, there is no need to consider other income, because the first income exceeds a threshold, which is 1 million, which means for the first requirement for registration, that is the first thing that you are going to do. So you have to look at all your income, but the first income, which is said, you take it into consideration, and then you apply, you say 2,678,130 times 100 divide by 115. So if the answer there is, so it's above 1 million, so flour has a value of taxable supply which exceeds a 1 million. So which means that requirement is met. Okay. And then requirement number 2. Okay, requirement number 2. Oh, let us start with requirement number 3. Requirement number 3 read as follows. Requirement number 3, sorry, I'm still admitting people here, so I am doing 2 tasks at the same time. Okay, so let's go to requirement number 3 first of all. Discuss with supporting calculation where necessary the VAT implication with regard to sales of trading stock made to, I think that is Nogwanda, not Ntando. I think that's a mistake. Can we please correct that one? I think here we have to say regard to sales of trading stock made to Nogwanda. Okay, let us cancel this note. Okay, this note, this reference is also, is it correct? It's not correct. I think it's note 2. Note 2. Okay, Sister Sonkela, I am going fast. Am I going fast or are we? Sorry? Okay. Okay, I will try to slow it down. Okay. So, okay, thanks. Okay. So let us go to note number, let us go to requirement number 3. Requirement number 3, discuss with supporting calculation when necessary the VAT implication with regard to sales of trading stock to Nogwanda. Okay, so before we go to the details of this note, what I want to highlight here is that Nogwanda and flour are connected persons. No, sorry, Nogwanda and Flower are connected person. So as connected person, so Flower is selling the trading stock to Nogwanda. So you have to determine the VAT implication to the connected person. What is the VAT implication to connected person? Then now let us go to note number 2. Okay. Ngicela umlele isiphile mlele asicishele imic yakhe. Okay, thank you so much. Thank you so much. Okay, so I said let us just go to note number 2. Note number 2, Nogwanda purchased a trading stock from Flower Ltd. The parties agreed to a price of 84,000. Although the open market value of trading stock, it's 84,000. Okay, guys, once you have two values or values in one transaction, that calls you to go to section 10, because now you will ask yourself, in order for me to calculate a VAT here, which value I have to use between 84,000 and 89,000. Once you have two values, so you have to go to section 10. Section 10 talk about the value of supply, because you are not sure which value you are going to use between 84,000 and 89,000. What it's going to help you is section 10 of your VAT Act. So you have to go to section 10. That is the thing that you have to know. All the time, if I have two value in one note or one transaction, so I have to go to section 10 to determine which value I'm going to use to calculate VAT between the two values. Okay? Then now, here, if you read at your story, you will remember that here they say here, Flower is owned by Nogwanda and Sibusiso. So Sibusiso and Nogwanda are the owners of Flower. So which means Flower is selling the trading stock to one of its owners, to one of its funders. So which means Flower is a supplier and Nogwanda is a recipient. So supplier and recipient are connected person, okay? So they are connected persons. So which means here, if you want to determine the value of supply, the first thing that you have to know or take into consideration is that I am dealing with connected person here. I'm going to calculate the value in terms of connected person. So the question now here, it says, what is a tax implication? The first thing that you have to indicate in this question 1 is that the sale is made to connected person, or Nogwanda and Flower are connected person. This is the first thing that you are going to indicate in this person. I mean this question. So I'm going to calculate the VAT implication for connected person. So Nogwanda, or the supplier and recipient, are connected person. The next thing after you have indicated that, you have to say now which value I'm going to use between these two values. Okay, then you go to section 10. Okay, so let me do it like this. Okay. Okay, now, okay, can you see a solution on your side? You can indicate by showing hand. Solution. Thank you. Thank you. Okay. Okay, this is the first question. You see, in first question, the first thing that you indicate is that you are dealing with connected. You are dealing with connected persons. Okay, so you indicate that the supplier and recipient, which by the way is Nogwanda, are connected person. So I'm dealing with connected person. So which means this is your first mark. Okay, you indicated that, okay, in this VAT implication, I'm going to calculate the VAT for a connected person. The next thing that you have to indicate is that how I am going to calculate the value. Okay, remember to calculate the value, you use section 10. So which means you have to go to your section 10. But to be specific, you go to section 10, subsection 4, which talks about connected person. Okay, so once you said here, I am given two values and I am dealing with connected person. So I'm going to go to section 10. Under section 10, subsection 4 deals with connected person. So it's going to indicate to me which value I'm going to use between these two values. Then you say, in terms of section 10, subsection 4, the value of supply will be open market value multiplied by tax fraction if the following requirements are met. Number one, supplier, which is flowers in our case, and recipient, which is Nogwanda, are connected person. So which means you say you apply this requirement if supplier and recipient are connected person. So the value may be an open market value. Number two, the supplier is made for no consideration. So if umdaisele for free without any price, or the consideration which is less than open market value. You will remember that in our example, consideration is 84,000, whereas open market value is equal to 89,000. You see? So, which means the consideration in our case is less than an open market value. Okay, because a consideration is 84,000 and the open market value, it's 89,000. So you said here, so my consideration is less than open market value. Number 3, the recipient will not have been entitled to a deduction of full input tax. So what does that mean? So basho ukuthi if unokwanda bengekakwazi ukuthola i-deduction, i-full deduction ye-input tax, what does that mean? So which means here maybe it can be indicated in the question, maybe in your question or in a question they can indicate that Nogwanda is entitled to 60% of input tax. So that indicates that Nogwanda it's not able to claim a full input deduction. So if ethenge go 100% and incur a VAT input of 100%, he is only able to claim 60%. So which means in that case, Nogwanda is not entitled to full deduction of input tax. That statement indicated. So which means you have to go back to your question now. Go back to your question and see if Nogwanda is entitled to full input tax. So if I go to your to our question or to our exercise 2, they say Flower Ltd is owned by Nogwanda and Sbusiso. Okay, and there is no indication. Maybe we should go to note 2. Under note 2, there is that statement which says that Nogwanda is not registered VAT vendor. Nogwanda is not a registered VAT vendor. So which means Nogwanda will claim a 0 rand of input tax because he's not registered as a VAT vendor. So which means he will not able to claim VAT input on the purchase of this item. He will not able to do that. So which means in this case, he's not entitled even to a cent of an input deduction. So which means Nogwanda is not allowed to claim since it's not registered as a VAT vendor. So which means in other way, it's going to claim 0% if there is something like that. It's going to claim 0%. So it's going to claim nothing because it's not registered as a VAT vendor. So in our example, meet all these requirements. First requirement, supplier and recipient are connected person. Number 2, the supplier is made for a consideration which is less than open market value. Number 3, Nogwanda is not able to entitle to full input deduction. Therefore, here, as we are given 2 values, the value of supply is going to be open market value, which is 84,000. Okay, is there a question? If you have a question and you're afraid to ask, you can just write it under chat and then I can I can answer that question. Is there any question before I go to a time of supply? Any question?
Yes, sir. I just I was signed out currently because of network.
Okay.
I just wanted to ask about the supply is made for no consideration or the consideration which is less than
Open
open
market.
market.
Yes.
So if she was registered as a VAT vendor, how would that line apply to her?
Okay. So if he was registered as a VAT vendor, so which means it's going to, we are going to say now how much is going to claim. The first thing that we have to, let's say she was registered as a VAT vendor. Does Nogwanda able to claim a full input tax? So it should be indicated. So in your question that Nogwanda is able to claim the full amount of VAT. Okay, so in that case, so which means we'll use a consideration, not an open market value. So we use open market value if we meet all these. If one of these requirements, so how I'm going to explain it. So we use, let's say Nogwanda is not meeting one of the requirements. So what we are going to do in that case, we'll use a consideration. But if Nogwanda meet all these requirements as stated above, so we'll use open market value. To answer you, if she was registered, the next question that you have to ask, is she entitled to a full input deduction? If no, then regardless that is registered, still we are going to use open market value because it does not meet all the requirements, all three requirements. I'm not sure if I'm answering your question. Am I answering your question?
Yes.
No, sorry, I was talking about the value of supply. Okay, so in terms of a connected person, we said you use section 10 to determine the value. So in our case, or in our example, in terms of section 10, so we'll use open market value. Okay, so that is what you have to take it into consideration. Then the next thing, maybe let me go to question once again. Note number 2, let us go to note number 2. In note number 2, last sentence, the goods were delivered to Nogwanda on 15 October 2023, while the payment was made on 30 September 2023. So we have two dates here. We have 30 September 2023 and we have 15 October 2023. Once you have more than one date. So you have to consider section 9, which is a time of supply. Okay, a time of supply just simply means that because here I am given 2 dates, which dates I am going to use, or when I'm going to first start calculating VAT. Am I going to start on 30 September, or I am going to start on 15 October? That is a time of supply. Once you are given 2 dates and above, so you have to know that here I have to apply a time of supply. So which means in the same question, you first address the issue of the value, because you have 2 values. The second things that you have to address, it's when I'm going to start calculating this VAT. Am I going to start on 15? Am I going to start on 30 September? So, which means you have to refer to your section 9 of your VAT Act whenever you have more than one date. So if you want to determine when I'm going to start calculating VAT, so you go to section 9 of your income tax, of your VAT Act. So you have to determine it. So going to your section 9, under section 9, you will remember that you have a general rule under section 9, which is section 9, subsection 1. Section 9, subsection 1, we call it a general rule. Since it is a general rule, you have to know what is the general rule. The general rule have 2 dates, okay? It has date of invoice, date of invoice, or date of payment. Whichever dates occur first. So which means the earlier of the 2 in terms of your general rule is going to be your time of supply. So section 9, subsection 10, it says you are going to start calculating VAT, or you are going to start claiming VAT earlier of date of invoice or the date of payment, whichever the date is earlier between the 2 dates. Coming back to our note 2, which one is the earliest date here? Senfuna impendulo. Sorry?
30 September.
30 September.
30 September. Uyabona ukuthi sesiseklasini sonke manje, hayi ukuthi ngibe ngedwa la. 30 September. So uzothini ke la wena? So uzothini? Ngokuka section 9, subsection 1. I-date engizoqala ngayo ukucalculate VAT u-30 September. Okay, in English, in terms of section 9, subsection 1, the time of supply from our scenario is 30 September, because is the earlier date. Okay, so I will start calculating VAT or I will start charging VAT as soon as I receive the payment, if that is the date of payment. So as soon as I receive a payment. So this is what you are going to indicate in this question. That is what you are going to say. So ngizobhala nje la ecaleni ngithi in terms of section 9 subsection 1, the time of supply is 30 September 2023. But before you state that, remember you must first state that in terms of this, the time of supply is earlier of invoice date or the date of payment. From our scenario now, the time of supply is 30 September 2023. Okay. Sisonke, ne?
Yes.
Okay, thank you. Okay. Next thing, you go to special rule. You go to special rule because here you are dealing with a special case. Which special case you are dealing with here? Connected person. So which means under section 9, there will be a special rule for connected person. Can you please remind me what is a special rule for connected person under section 9? For connected person, Kumbuze. Okay. Okay, ngizokhomba ke la. Siyakhombana la kuleli class. Yes, Andiswa Thusi. I'm asking the time of supply for connected person. What is a subsection specifically designed for connected person?
Subsection 2.
Thank you, thank you, Put. So, kusho ukuthi uAndiswa umsavile ne kufanele akubonge. Section 9 subsection 2 deal specifically with connected person. Okay, so all the time if you are dealing with a connected person, it's going to be section 9 subsection 2, which is a connected person. It's going to indicate when you have to first, what is a time of supply? Okay, so section 9, okay, reads as follows. Section 9 subsection 2. It says that where a supplier of goods or service shall be deemed to take place where a supplier and recipient are connected person. Number 1, at the time, can I please take? Okay, sorry about that. I was saying that section 9, subsection 2, please read it. It say, number 1, where the supplier and recipient are connected person. The time of supply, it's going to be a time of delivery if the goods are movable. It's going to be time when good made available if the goods are not movable. It's going to be a time when the service is performed in case you are rendering what is known as a service. So you have to know all of those items. So which means now we have to go to our scenario and look at the type of the goods that we are selling. We are selling what here? Trading stock. Okay. Let us assume that the type of the trading stock we are selling is movable, because note number 2 indicate the delivery dates, isn't it? So which means we are selling a trading stock to Nogwanda, which is removable, because we are given the date of delivery. So kusho ukuthi now sesibuyela back kuma-date wethu. First of all, we look at the general rule and say, in terms of general rule, the time of supply is 30 September. However, in terms of section 9, subsection 2, you indicate the times of supply. You say when it's a connected person, if it's removable, if it's not removable, if it's a service, and then you indicate those cases. Then you go to your scenario now. When the goods were delivered, or when the goods were made available, or when the service was performed. In our case, it is indicated that the service was performed, the goods were delivered on 15 October. So you said now, in terms of section 9, subsection 2, according to our scenario, so the time of supply is 15 October 2023. Okay, or you can say here, however, in terms of section 9, subsection section 9, subsection 2, the time of supply is date when the goods are delivered. So from our scenario, it is indicated that the goods were delivered to Nogwanda on 15 October 2023. Therefore, the time of supply is 15 October 2023. Okay. So now you've got 2 dates. First of all, you indicated that the time of supply is 30 September. Now, if you go to section 9, subsection 2, the time of supply, they are saying now is 15 October. So you have to conclude now, which is which between the two? Which one is going to be final the time of supply? Because section 9, subsection 2, UT is 15 October. Section 9, subsection 1 indicate that it is so we have, obviously we have 2 dates. We have 15 October plus we have 15 October no September. Which date we are going to use? between the two. So going forward, if you read there is a provision which says all the time, if section 9 precedes the dates which are stipulated in section 9, subsection 2, you apply section 9. So which means all the time, if section 9, subsection 1, efike kuqala i-date yakhona okay first, then the dates indicated in section 9, subsection 2, you use section 1. That is what you have to apply here. What I am saying here is that in our case, section 9, subsection 1, the date is 30 September. However, section 9, subsection 2, the date is 15 October. So umbuzo uthi njengoba sebenzise u2 lama section ekunika ama date angafani, which date you will finally use as a time of supply? Okay, I am saying here, i-provision ithi once i-date ka-section 9 occur before i-date ka-section 2, you use section 9. In our case, remember, i-date ka-section 9 u-30 September, which is before i-date ka-section 9, subsection 2. I-date ka-section 9, subsection 1, it's 30 September, which is before October, which is the date of section 9, subsection 2. So, which means in this case, section 9, subsection 1, occur before section 9, subsection 2. So, which means in that case, you apply section 9. Okay, so that is what you have to do. Now I understand. Is there anyone who's confused? Okay, so if it is a izwakala kahle kuright. Siyabonga. Okay, ngiphinde. Okay. No, ayikho inkinga. Okay, kule scenario sinama date out 2. Okay. So no 30 September. 30 September is the date of payment. Sibe the 15 October. 15 October is the date of delivery. So which means is the date which is stipulated under subsection 2. Whereas a date of payment is the date which is stipulated in subsection 1. Kusho ukuthi sine date ka general rule which is 30 September. Sibe ne date ye special rule which is 15 October. The question is which date you will finally use here. Sithi-ke since the payment date occur first, occur before the delivery date, we are going to use a payment date because a payment date yenzeke before a payment, before a delivery date. We'll use a payment date as the time of supply since the payment precedes or occur before the delivery. That is what I was trying to say. So, which means in conclusion, the time of supply here is 30 September 2023, because 30 September 2023 is before 15 October 2023. That is what I was trying to explain there. So done in terms of that question. So any question? Okay, let me assume that so far so good. Okay, then now siqedile go adjustment number 2. Let's go to adjustment number 11. Remember, we are starting with theory questions here. Okay, let's are we all on adjustment number 11? Yes, there is a question from S. Nkosi. You can ask your question. S. Nkosi. S. Nkosi, can you please mute your mic? We cannot hear you if you are speaking on your side. Yes.
There.
Yes.
I wanted to double check as to which law or part of the legislation gives us the info about the precedence of the date stipulated in section 9 subsection 1.
Okay, you want to see it specifically specifically on your legislation. Okay, so are you asking me to refer you straight to that section which state that whenever section 9 subsection 1 precedes section 9 subsection 2? Are you asking that question?
Yes, I just want to check if do we have to reference that to like a certain part, or we can just assume general knowledge and say and conclude in terms of assumptions.
Okay,
assuming that we know.
Okay, no, you have to get it from section. Okay, you cannot assume. You have to get it from section, so it should be in section, in your section 1. So do you have your legislation with you? So yes, I assume you do have. You see under subsection 2, there is number 1, number 2, number 3. Yeah, ubona ne?
Yes.
Okay. And there is a provided. Do you see provided after that?
Yes.
Okay, that is called exception. Ne? Provided this paragraph shall not apply in case where invoice is issued or the payment is made on or before. Okay, so which means if the payment is made on this date or before this date, so this paragraph will not apply. So that is an exception.
Okay, so thank you.
Yes. Okay, thank you so much for your question. Thank you so much. Okay, so okay, now we are on note number 11. Ngicela note number 11 siwufunde, because that question iyona question enamama akufanele uyazi theory in your theory question. Let's go to 11. Are you all on note 11? just want to see indication. Are you all okay? Okay. Okay. Sure, I will read. Okay. So noma ngaqali ngokufunda, let's identify the things that are going to guide us. One of the things is that we have two values here. Okay. It's no 16 million, no 14 million. Okay. So one of the questions that we have to ask ourselves, which value we are going to use between these two values. Okay. Then the next thing is, in this note, we have how many dates? 3 dates. We have July, we have August, we have September. Okay. So, which means that is section 9 now. So you have to determine which dates you are going to use between this date, which one specifically you are going to use, since we have 3 dates here, because we have 3 dates. Then let me read now after identifying those 2 things which are important. So which means I was trying to say, you must know that you are going to apply section 10 because we have 2 values. Then you are going to apply section 9 because you have more than 1 date. So now those are the things that you have to take into consideration. On 1st July 2023, Flower Ltd purchased a second-hand goods, a second-hand commercial building from Zianda Mthembu for 16,254,000, while when the open market value was 14,364,000. Zianda is not a registered VAT vendor. Excuse me, the amount is payable in 5 equal monthly installments, beginning on 30 September 2023. The registration in deeds office occurred on 31st September 2023. The building is purchased for a purpose of making both taxable and exempt supply. So now here we are purchasing this building for both taxable and exempt supply. So now the first thing here that you have to take it into consideration is that you are purchasing a second-hand goods. Or the first thing that you can consider here is that you are buying this good from someone who is not a registered VAT vendor. So Zianda is not a registered VAT vendor. So by the time a dies on a property, he was not allowed to charge VAT. Okay. So obviously, when you are buying it as Flower Ltd, you are not entitled to a VAT and input deduction. So which means the first thing that you have to indicate here is that no input tax may be claimed by Flower Ltd since the building was purchased from a non-vendor. So since this person is a non-vendor, so which means he's not entitled to a deduction. So a deduction is not going to be allowed. Okay, because this property is purchased from someone who is not a VAT vendor. So no VAT may be claimed here. This is one of the first things that you have to indicate. The second thing that you have to take into consideration is the word second hand. Okay, second hand good. So since a flower is purchasing a second hand good, what does that mean? He may able to claim what is known as notional input tax. Although the second hand good was purchased from a non-vendor, because the item the business is acquiring is a second hand. So flower may claim what is known as notional input tax. Okay, these are the things that you have to indicate. Then the second things that you have, okay, let me just quickly share a solution here. Okay, you see, can you see a solution on your side 1.4?
Yeah.
Okay, thank you. Okay, you see they are saying flower will not able to claim input tax in respect of acquisition of building from a non-vendor. So because he purchased this building from a non-vendor, so he may not be able to claim the VAT. The only things that he may pay is a transfer duty tax. So he may pay something which is known as transfer duty tax. Okay, this is the first thing that you are going to say. The next thing that you are going to say is that since a flower is buying a second-hand good as defined under VAT Act, he may claim what is known as notional input tax, or what is known as deemed input. So irregardless that is buying it from a non-vendor, since he's buying a second-hand good, he may claim what is known as notional input tax. So they say here he may claim it on the purchase price. Okay, I'm not sure about this statement, but it's going to calculate the notional input tax at a tax fraction. So how it's going to calculate it? So here, before you calculate a value, let us delete this one. So before we determine a value, we must go to paragraph B of input tax definition. So it indicates us to us that the value, the input tax is calculated at a lesser of consideration or open market value. So you either use a consideration which is purchase price, or open market value, whichever it's lesser between the two, and you multiply it by a tax fraction. So which means in our case, the lesser amount is 14,364,000. I said here to determine the value before you go to section 10. Maybe you can first go to paragraph B of input tax deduction. So it indicates that the input tax is calculated at a lesser of consideration or open market value. So in our case, the lesser amount is 14,364,000. So you have to multiply 14,364 times 15 divided by 115. Then you will get an answer there. So before you go straight to section 10. So let us first deal with definition of input text. So which means the first thing that you are going to do here, before you go to section 10, you first address paragraph B of input text deduction. Then that paragraph indicate which value you are going to use between the two values. It says you take the lesser of consideration or open market value. In our case, we have 16 million and we have 14 million. So obviously, in terms of paragraph B of input deduction, we must use 14 million since it's the lesser amount. What is the final product if you take 14,364 times 15 divided by 115?
$1,873,565.
1,873,000. Yes,
565.
565. Thank you so much. So, which means we call this amount a limit. Limit. Okay. So you have to indicate it as a limit because it's a lesser amount. Now, you can say here for your note, that is something that you are going to remember. Irregardless okay, regardless of any rule that will apply later on, but you have to limit the claim of your input tax, which means you cannot claim more than 1,873,000. Regardless of any rule that you are going to apply later on. So which means there are other rules that we are going to apply later on, but you have to remember that regardless of those rules. So my final claim or my total claim on notional input tax should be limited to 873,565. This is my limit. So you have to remember that. Okay. Then now I am going to another one, which is very important here. Going back to your example, if you remember, they say flour is supplying both exempt supply and taxable supply. So which means in this business, they are supplying both exempt and taxable. They are supplying taxable and exempt. So remember, now, if you are supplying both exempt supply and and taxable supply. So you have to apply what is known as 10 over base method. 10 over base method. A 10 over base method is based on 95%. Okay. So this rule says that if you are supplying both taxable and exempt supply, and you are buying something which is going to be used for taxable and exempt supply, if the percentage of your taxable supply is not less than 95%, you will not apportion. No no apportionment if not less than 95%. So if the value of your taxable supply, value of taxable supply is equal to there is this thing. Okay. If your taxable supply is not less than 95%, you will not apportion. Okay. But once the value of supply is less than 95%, you apportion. I'm going to explain this rule in details now. In our case, we are buying this second-hand property. We are buying it for a purpose of making exempt and taxable supply. The first thing that we have to do before we calculate an input tax is to calculate a 10 over base method, okay? And determine whether our taxable income is less than or it's less than 95% or not. So which means in any case where the supplier is supplying both taxable and exempt, you have to calculate a 10 over based method and check whether a taxable supply yakho is above 95% or not. If a taxable supply yakho is 95% or above 95%, there is no need to apportion. You calculate the VAT as it is. You take it as 100%. But once it turn over base method yakho, you have a less than 95%. In that case, you will calculate, you will apportion your input tax. So there is a formula which we normally use here. The formula is Y is equal to B divided by D. I'm going to call B. Okay, let's just call this B tax. Okay, how are we going to do it? Okay, we said, okay, we say A, Y is equal to A divided by A is equal to exempt supply. D is equal to all supply. So which means exempt plus taxable. So this is your D. So which means in this formula you will have the value of exempt supply and the value of all supply. So if you take this, divide by this, you have to get a rate. So in our case, this is going to be a calculation now. So in our case, maybe we can start with A. A is the easiest thing that you can calculate because there are few amounts. So you have to determine the exempt supply in our question. So in our question, one of the exempt supply is 945,000, which is residential. The next one is interest. The next one is interest. There are two interests. These are our exempt supply. So which means we have three exempt supply, if I'm not mistaken. We have 945, and then we have 7,560, and we have 4,725. So we have these three exempt supply. So we have to add them together. So which means we want to calculate 95%. We want to determine whether our taxable supply is less than 95% or not. The first thing that I suggest you have to do is to calculate the value of an exempt supply. So what is the total if you add all of these three values? Next thing, you have to calculate all values. What is 945 plus 7,560 plus 4,725?
It's 957,285.
910?
57,000.
57,000, yes.
285.
255.
85. No,
Okay.
285.
285. Okay, this is the value of exempt supply. Okay, let us just calculate now the value of taxable supply. I think we have to start with 2,610,000. Okay, this one it's going to give us some. We have to calculate here 2,678,130 times 80%. Okay. We come up 80%. Anyone who can help us times 80%?
60% and all that.
No, okay, with 16 or 20, né? Thank you so much.
Yebo.
With 16 or 20. Why calculator look? Because remember, all amount include VAT. Niyabona? Kusho ukuthi
Yebo.
i-VAT include ku 60% nakuba naku 20%. Remember, if we are calculating the taxable supply, we exclude VAT. So now here we'll say, look, this 80% include VAT. Let us first exclude VAT from this amount. times 100 divided by 115. I think this is what you have to do. The next thing that you have to do now is to say 2 million again, 678,130 times 20%. %20 is zero rated, isn't it? So which means there was no VAT which was added in the sales of what? Of 20%. Okay. Then the next thing that you can do maybe is to add 84,000. Still you have to exclude VAT here, divide by 115. Then, okay, let us do it like this. Plus 661,500 plus 359,100. All this amount you multiply by 100 divided by 115. Okay, this is what you are going to do. So which means you have to add 84,000 plus 661,500 plus 359,100 times 100 divided by 115. Then you get an answer, you calculate this side, you do one and the same thing, then you get an answer. Unfortunately, I don't have a calculator on my side. So 2,678,130 times 80% times 100 divided by 115.
That is 186, or 1,863,063,047.
1,863,047. Thank you so much. Then what is the 20% of 2 million? 678,130.
535,626.
535.
35.
35, yes.
626.
626. Okay, plus 84,000 plus 661,500 plus 359,100 times 100 divided by 115.
$960,522.
Okay. 960,000.
522.
522.
Yes.
Okay, and then what's the final result?
It's 3,319,195.
Okay, and then plus, because it's all supply now, plus 957,285. This one. Okay. Okay, the answer, the final answer.
4,276,408.
2 million. I mean 4 million.
276,408.
Thank you so much. Okay, let us go together now. So which means our total supply. This is our total supply. Total supply. Our total supply is 4 million. Okay. So we go back to our formula. Now we have A, we have D. So which means Y is equal to okay, Y is equal to, let me call it exempt, so that you can remember exempt divide by a total supply. So the formula is exempt divide by total supply. So which means here, you will say 957,285 divide by 4 million, 4,276,480. What is the percentage there?
Kune-error ku-calculation yethu.
Oh, error. Okay.
Yes. Lapha ku 3 million, it's supposed to be 3,359,195.
Okay. Supposed to be 3 million.
359. 359.
Yes.
195.
100.
Then so eternally exempt. Itoba
Yes.
4,316,408.
316. 408. Okay. Thank you so much. Okay. Then what is the final answer? 957,285 divided by 4,316,480. Basakhona abantu.
Yes, it's 22.18%.
Oh, okay. Kupuma 22.81%.
18%.
Okay.
18.
18%,
Yes.
isn't it? Okay.
Yes.
Okay. Okay. This one, this percentage is for exempt. Okay. Tina, we want taxable. We want taxable, not exempt. So, it's 100%, which is our total sales, which means our total sale is 100%. Minus 22.18. So, which means the total supply is 100%. This is our total supply, 100%. Then you subtract 22.18. What is an answer?
77.82.
77.8. Now, Yvonne,
Yebo.
77. Thank you so much. 77.8. Remember, here you have to compare this one with 95%. 95%. Ask yourself now, is 78% above or less than 95%? Yes. Is less than,
Less than.
Yeah, it is.
Yes,
Yes,
90,
Yes.
yes, is less than. Which means we will apportion. Will apportion input tax by 78%. Okay, so any input which is for both exempt and taxable should be apportioned by 78%. But la, if besithole la asenze an example, let's say here ku-y wethu bese uthole waba u-4%. So if bese uthole waba u-4%, bese uthi 100 minus 4 is equal to 96. And we'll conclude that since 96% is above 95, or is not less than 95, no apportion. No apportionment. If it was 96%, if we're still 96%, so we don't apportion. We only apportion if this percentage is less than 95%. Once satellite percentage here, which is less than 95%, we apportion. So so this is what we are going to do going forward. Okay, so let us stop here today. Then on Thursday, I think we are going to use our timetable slot. We'll start from 78% going forward. So we'll see how are we going to apply this 78% in our calculation. Okay, for today, let us stop here unless there is a question. But you have to take a note that on Thursday we have to use our time slot. Preferable, maybe we can use one, maybe at 12. Then we start from 12. Then we'll see how far we'll go. But I should supply you with a solution now, and then you go and do calculation on your side. But yes. Okay. So let us call it for a day, unless there is a question. Any question?
Sithi usuku mina, right?
Yeah, Ishai, kunzima.
Call it a day.
Sir, I didn't hear you in the beginning when you were talking about the test.
Oh, i-test. Oh, i-test. Angithi i-test iwumhla bani kanye be-test? Umhla 24.
Asibhale after recess bu. Sesibuyile.
I-recess. Hayi, angithi sesithini. Kodepende ukuthi nibuye nini. Kodwa menisheshe nabuya sayibhala ne. So menibuya after i-recess ke.
Asinayo ukubuya.
Wena
Eyokubuya
asifuni kubuya.
Okay. Okay, asazi. Ngiya-understand ukuthi why nisho kanjani. Okay. Okay, sure. Sure, asiyibhaleni, sure.